if there's no rate cut, coming back to what we do in our industry, that's really sort of centered around real estate and mortgage starts and origination. Sorry, how do you if there's a pause in the rate cut? What do you think that does to the real estate market in let's just in the GTA?
I think psychologically, I still think that we've had enough rate cuts for us to have a strong spring market. I don't think that it has a huge change that, hey, we're going to pause one meeting where we've had such a good run of rate cuts. I still think that we get lots of buyers in the market this spring.
Yeah, I think that, I mean, my total outlook for this year is fairly positive. I don't know that we'll have that it'll be explosive as I maybe would have previously projected, but I think that it's steadily gaining momentum over the year. But I think that a pause in the rate cut at the end of this month could prolong the wait until we do get back into a explosive market. I mean, there's a lot of pent up demand, and there's probably a lot of people that were thinking about selling, waited, and they're if it was an inevitable decision anyway, that's you can only wait so long. So I think we'll definitely see momentum in the market, but with a pause in the rate cuts right here, it could take a little stumble to get out of the gate.
Well, so we had 67,000 sales in the TREB market last year in 2024. I mean, certainly there's going to be a few different things that happen. I'm prepared to say that we get over 80,000 transactions or 80,000 units sold of all property types in 2025. I think we do have a bump. If you want to pin me to it, 83,000 is my official guess. But I think, if you want to give me a range, why don't we do the housing and interest rate ranges of what you think it's going to be at? And maybe
where do I think
give me the low range because they're going to pause and the high range because they don't pause.
Well, let's say I think I'm a little more timid on my predictions for this year, like maybe 78,000, because I think that the condo market is still going to be lagging. Now, I think that if you're interested in getting into the market, I think that a condo is a great place, because I think in a few years there's going to be tremendous value because nothing's getting built right now, and we have we sort of pinched the garden hose on immigration a little bit, but eventually that's gonna become unkinked, and that's gonna open up again, and you're gonna see a lot of value in the condo market, in the investment market. So this year, 78,000.
78. I'm 5 ahead of you. I'll say 83.
All right. Well, we're in the same sort of ballpark. I mean, look, I would love to see more than that. Let's get out there and get busy. But there's economic factors at play there as well.
Yeah, and it's nowhere near a high. Like we were up over 100. I think don't quote me on this, but 115,000. I think transaction units sold at one point.
Was that when the money was free? When the overnight rate was 25 basis points?
Yeah, so overnight rate is at 3.25%. The prime rate's at 5.45%. You've been pretty vocal on a pretty low overnight rate and prime rate. What's your guess by the end of 2025? Where do we end up?
I'm gonna stick to my guns on this one. Well, the activity I can't completely predict. I would say that overnight rate 2%. I've been saying that from the beginning, which would put the prime rate at 4.2.
All right, I'm going to go a little higher. I'm going to say that we'll be at 2.5% by the end of 2025, which would make the prime rate 4.6%. I think.
Yeah.
So if 75 basis points off.
If it takes till the end of the year to get to my prediction numbers, that means that in 2026. We'll have restored the same level of mortgage borrowing power that we had sort of from 2017 onward. And so right now we have less borrowing power. Key factor there is the not the overnight rate. We obsess about the overnight rate, but really the overnight rate doesn't affect any sort of impact of our lives. That's really for bankers.
You mean the prime rate does?
The prime rate, yeah. And we've been focusing, and it's something I've been noticing on social media a lot, is that we're focusing on the overnight rate, but the overnight rate is just underneath the rate that impacts us, which is the prime rate. So when we think of prime minus to get to your variable rate discount or your HELOC or your line of credit interest rate, we really should be focusing on prime rate 100% of the time.